And welcome to the VSA Capital Tech and Transitional Energy Podcast. It's myself, Andrew Monk, and Phil Smith sitting here. Phil, how are you doing?
Very well, thank you, Andrew, on a very sunny afternoon.
Well, it's sunny here in London, but it's pretty dark and gloomy around the rest of the world. Obviously, the main talking sort of points are with the oil price going somewhat ballistic, although it's swinging around all over the place. Currently $111, 111. And a lot of money sort of switching out of tech into other places for sort of safety. We've also just obviously seen that the central banks are not going to be cutting rates. We saw that last night out of America. We saw it today out of the Bank of England. In fact, if anything, they're talking, they may have to get up to stop inflation rearing its ugly head. It's World War III out there, which makes life very difficult, makes the markets difficult, makes looking and buying at stocks difficult. But for the brave, could become a buying opportunity. Who knows? Having said that, I think that certainly for the big American tech, when I've just been having lunch with some really quite knowledgeable people, and as they put it, tech has done incredibly well over the last sort of 20 years because it was very asset light. I mean, it was just somebody sitting in front of a PC and developing some programs or something. Not quite as easy as that, but you know what I mean. And of course, it's changing. It's now becoming asset heavy because tech is building data centers, AI, actually, because you need the data center, you need the energy. It's becoming very asset heavy. This is a major change and will change people's thinking about the way they want to treat these investments. So that's not very positive for tech. I apologize for that. But it's also sort of reality. And then on transitional energy, of course, you could argue that people should be jumping up and down with joy on transitional energy because we're going to have no oil and gas left, are we? Because it's all getting blown up. But actually, what people are starting to realize is that actually you need oil and gas. And without it, things just stop. Ed Mini-Brain, as I call him, hasn't worked it out quite yet. I think that Rachel from Accounts, she's worked it out because she's actually come forward and said, well done, everybody who's producing lots of oil and gas. So she's complimenting everybody who's producing it, except the UK, because, of course, we've stopped it. But anyway, there we go. Now, this week, Phil, you and I went up to the Excel conference centre, didn't we?
Did, Andrew? Yes.
And we went to what's known as the PTE exhibition. And you might want to tell our listeners what PTE stands for.
Passenger Terminal Expo.
He's got it right. That was a test and he got it right. We love to give Phil a bit of a test. The Passenger Terminal Expo, and obviously our client that we talk about pretty much every week, but I'm sorry about that. Arrigo was there with their auto dolly and also an auto transit van. But more importantly, CVG, which is Cincinnati Airport, were also there with a stand, and actually they had Origo as part of their stand. We were talking to both. I actually went for dinner with both. I mean, the relationship is so close and so positive. You really cannot underestimate it, and it's very, very important. But they were having a pretty good time. We wandered around some of the other stands as well, and there was one or two other people obviously looking at the whole automated airside situation, but there's no one out there who can do it. In fact, we even talked to a few people who can't do it, want to do it, and they were saying, yeah, we must go and see their stand, and maybe it's time we had a bit more of a chit-chat, so to speak. Anyway, there's various stuff we've put out on social media regarding that, so you can all look at that yourself. So as I say, this actually, the news is all sort of global, big picture stuff. So let's move on to Phil's bit and the results, and we'll probably make this quite a short one. But off you go, Phil.
Oh, right. Okay. Got me there, Andrew. We'll just kick off. We had first half results onto AI infrastructure, actually. This is Softcat, tickers SCT, 2.5 billion market cap. Their shares are down by 22% in the last year, but they certainly ticked up on these interims. Softcat supply, I mean, this is all about infrastructure for AI related to its data centers, networking, server technology and software. Just reported hardware revenue growth of 79%, driven by data centers and networking, which Andrew and I have discussed on many occasions. Software revenue growth of 26%. That dropped down to profit growth as well, and they just got on in their statement to talk about AI, but just generally performing very well despite prior tough conditions. They have highlighted, though, the impact of memory chip shortages and uncertainty there, but they're expecting high single-digit growth of underlying profit. So, as I say, that certainly helped their share price tick up. Now, one that we certainly mentioned before, been listed for a long time, is Diploma.
Good news out of them.
Yeah. This is just under 8 billion market cap now. Their shares are up by 49% in the last 12 months. They had a trading update. They've upgraded their full year 26 expectations. And this is an advanced engineering and technology business. They provide electromechanical interconnect solutions, high performance fasteners. This is for aerospace, defense, energy, and specialty fasteners. And they said that the controls business, which these technologies come under, has performed very strongly, particularly in energy, defense, and aerospace. They also said that their Windy City, their low voltage wire and cable management solutions for infrastructure, going to data centers, not surprisingly, is performing very, very well. Life sciences, they point to a tough healthcare market, so not doing so well. Nonetheless, they're upgrading their full year guidance, expecting organic revenue growth up by 9% versus 6% previously. Operating margins up to 25% versus 22.5%. So, this is a company that has consistently growing and is continuing to do very well.
Very good.
Yep. Going on to a little one now. This is ThruVision, 4 million market cap, but they do body scanning technology. Yeah, for airports.
Yeah, I didn't see them up at the conference.
No, but
maybe they should have been.
Lots of bigger companies there, and the stands are expensive, and it's still quite a small one. So anyway, nonetheless, they won a new contract for US $0.6 million. And this is for 5 of their scanning systems, 2 years of support. This is for the US. And that is at, the contract follows, a recent award for aviation workers. This is all about worker scanning at airports. So this is at Seattle Tacoma International Airport, and they now have 5 US airports using their systems. Yeah, ThruVision. Placing got done in EnSilica. Chip designer, 52 million market cap. Shares up 28% over the last 12 months. This is a fabulous semiconductor chip company, and there it is, RF radio frequency microwave technologies, and they raised £10 million at 47 pence a share. The shares are currently trading at 49.5p. Science Group, SAG, 228 million market cap. Shares are up by 30%. They have full year results. Interesting company, this. It's a mix of consultancy, technology consultancy, but also products as well. And just briefly, they reported that their operating profit was 40.9 million versus 14.9 in the prior period. There's quite a jump there. We'll get into that. Had strong cash from operations, but they've seen good demand for their services division. This is consulting, consumer defence, aerospace and industrial. And that generated £71.5 million. But their product businesses, which I say there's detail before, but they have one product business that is this is oxygen generating systems for submarines and CO2 extraction. The revenues are 26.4 million. Primarily, this is serving the UK Navy, and I think this used to be called, they acquired this was called TP Group previously. I remember this company. But they also have Frontier IP, which is semiconductors, and this is for consumer electronics and radio, and that saw revenues of 13.2 million versus 12 million pounds. But just overall, seems to be reporting good progress that's dropping through to their profits and their cash flow of broadly spread business. The only other little one I spotted was Journeo. We've talked about this before. This is display systems for transport, particularly for the rail networks. Digital display systems, 68 million market cap. Shares have been doing very, very well. And they won a small contract, but they point out an important one with Danske Statsbaner. This is Denmark's biggest state-owned passenger rail firm, and the contract was worth £0.6 million. But And that was it. It was pretty limited. I don't know if you've spotted anything else.
No, I think this will be our shortest ever Tech and Trans podcast, which is good because we're quite busy. So yeah, we'll just call it a day then. Hope everyone enjoyed it. Back next week.
Chat then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.